We're gonna, while you all finish your wonderful salad and they serve us lunch, we're gonna get started with our program so you can get on with your day. So hello, and again, on behalf of the Arkansas Asset Funders Network, I want to welcome you today to our Alice Champions Luncheon. You are here today because we have brought together some of our boldest executive leaders to launch our new Alice Champions Initiative. But before we begin and talk a little bit about that, I want to acknowledge our guests who are joining us virtually and extend many, many thanks to our friends at Arkansas PBS for live streaming today's event on their Arkansas PBS YouTube channel. So thank you very much. Also want to take a moment and recognize our elected officials who are here and are watching virtually, and how much we appreciate you all tuning in to this very important topic. All right, let's talk a little bit about Alice. Due in large part to the COVID pandemic, Alice has been deemed in many cases more essential than ever before. Alice, as we know, are individuals in jobs who work hard, but often fail to earn enough to cover basic household essentials, let alone save for emergencies. Alice is your child care provider, your grocery store clerk, your waiter or your waitress at your favorite restaurant, or maybe even one of your employees. These are individuals with whom we interact on a daily basis, but often render invisible. In Arkansas, a household survival budget for a family of 4 is $46,812 for a family of 4. This means that at 41%, almost half of Arkansans work hard but fail to earn enough to cover basic household needs. 60% of all people who are employed in Arkansas work in what are considered low-wage jobs. According to the Winthrop Rockefeller Foundation's Business Case for Equity report, if Arkansas households made the survival minimum, it would add $8.4 billion more in total annual earnings for Arkansans. If Arkansas households met the survival minimum, it would add $6.9 billion more in annual consumer spending. And if Arkansas households met the survival minimum, it would add a $2.4 billion net gain to our state's budget through greater tax revenue and less spending on Medicaid and income assistance programs. Because of the pandemic and because of the cost of food, rent, and other basic household items continue to accelerate, we believe now more than ever, it is time to focus on Alice. For the past year, the Arkansas Asset Funders Network, through funding from the Bill and Melinda Gates Foundation and the Winthrop Rockefeller Foundation, has worked with high-level executives from across our state to explore our connections to Alice, to dig deeper into who Alice is in our community, and to identify where Alice resides within our companies and our organizations. The goal of this initiative is to build a group of Alice champions, influential leaders like you who are willing to see Alice, to hear from Alice, and to act on behalf of Alice. Leaders who are willing to leverage their power and influence to create a better society for Alice to thrive. Arkansas AFN has worked with some early Alice champions to identify several ways to activate others within their networks and spheres of influence. This includes talking to professional and social networks about the systemic underpinnings of poverty as they relate to Alice, promoting internal policy changes that directly impact Alice workers, or proactively supporting legislation that can help Alice households thrive and succeed in Arkansas. So today we have gathered an esteemed group of panelists who have agreed to be early champions for Alice. Each individual has worked to implement programs and policies within their own organizations that make a real difference for Alice. So with that, I want to invite our panelists to the stage and turn it over to Roby Brock from Talk Business and Politics, who's going to moderate today's discussion. And we are all excited to hear what you all have to say. Thanks, Roby.
Thank you, Heather. Appreciate that very much. You notice the panelists are esteemed, but the old moderator not esteemed. So, this is how that. I'm used to that, so it's good. It's good. It's good. It's good. Yes. Well, let's start from farthest away from me and work our way around in terms of introducing our panels. We have Marcy Doderers, the CEO of Arkansas Children's. We have Darren Williams, who is the CEO of Southern Bancorp. Not Bancorp, Southern Bancorp. That's good. Tad Bohannon, CEO of Central Arkansas Water. And I'm a little scared to say that I know all of you way too well. So this is going to be a nice casual conversation, but at the same time, we're going to get a lot of good information out there. Thank you all for being here today and lending your time to learn a little bit more about Alice. Marcy, I'm going to begin with you and just ask you to kind of share, and you're all going to get the same first question here, just kind of what was your introduction to the concept of Alice, and when did it kind of dawn on you, I need to get involved in this?
Well, truthfully, I had never heard the phrase Alice until the team called and said, would you be interested in being part of a testing sounding board for how we want to talk about this differently in Arkansas? And I think that's probably true of a lot of people in our communities. I think we are used to some old language around the working poor, those kinds of words that I think stigmatize differently. So it was early in this calendar year that I was introduced to that acronym Alice, and it kind of hit me in the gut because I think about young people in my own family. So a niece who's 30 with $60,000 in college debt as a child librarian. She doesn't live in this state. So as a single person, she's doing okay today, minus the debt. But her earning potential is really limited, and should she ever become the primary breadwinner of a family of more than one, she's going to be Alice. And then my younger daughter is pursuing a degree in music education. She wants to teach high school orchestra. We heard this morning that our Little Rock School District's real excited to move from a $36,000 starting wage for teachers to $43,000. But if Katie were to ever be a family of four and a teacher at the Little Rock Public Schools, she would be less than Alice. And that kind of realization hits home and makes me want to be more involved in doing something different.
How about you, Darren?
Yeah, so Southern Bancorp has a long history of working for Alice families, even before the Alice Report. And so my experience really with Southern dated back to my time in the legislature, representing District 36, and Southern really had just a long history of working to reach un- and underbanked people. So in the state of Arkansas, 7.5% of people have no bank account at all. 19% are what we call underbanked, meaning they might have a bank account, but they don't use it properly, or they still access high-cost, often predatory products and services. So from our work as a community development financial institution that really focuses on serving underserved people, this is our work every day. And so it is, it's important work. It is meaningful work, but it's also very much needed to support the families in Arkansas who struggle with basic necessities.
How about you, Tad? What was your first introduction to this concept?
I kind of stumbled into Alice, and it was about 2 years ago. The board we've been working on a long-term strategic plan for Central Arkansas Water, and one of the issues that we struggle with every month is low-income households and how are they going to pay their utility bills. And the EPA uses it all based on federal poverty levels, but we realize that that's not just where the problem was. The problem was at a much higher level. So a couple of years ago, when I was looking around for how do I talk to the board about this and how do we figure this into our long-range strategic plan, I just kind of stumbled across Alice, and I said, this is it. This is the issue we deal with every day.
Well, let me stick with you, and we'll work our way back down the panel here. What was the board's reaction when you give me a little bit more explanation of how you explained it to them? How easy was it for them to understand the concept, and what was their, I guess, urgency to do something about it?
The board was very open to it, and I have a board member here today. Candy Hughes is here, so give her a shout out real quick. But the board was very open to it, and it's very relatable to the board members and to the utility as to how does this work and who does this apply to. And one of the things that we deal with is how do people afford to pay for sanitary water so they don't end up in Marcy's hospital sick because they couldn't afford clean water. So they've been very open to it, and it is something that they have put on the front burner for our organization to figure out, okay, how do we provide assistance and how do we provide resources for our customers that need assistance on their bills, but also just assistance with life. So it's a great panel I'm here with today, because I was just talking to Darren earlier about, we deal with those unbanked people every day. And so it is not just limited, it crosses all sectors.
Have you instituted some new policies, I guess, to deal with customers now in this respect?
We have. We are a limited. Do we have any legislators here in the thing today? So
they're watching. They're watching, Tad.
I'm just gonna shout out. If one of our, let's get real practical about it. One of our real problems is our service stops at the meter. What we get to work on, you got your meter out in front of your house, but if a customer has a break on the line on the other side of that meter's running. We're sending them a bill for that. But we're trying to get ways to be able to help those customers and what have you, because literally you have, real story, a young woman, mother of 3, wakes up every morning and goes out and turns her water meter on so that she can get her kids ready to go to school, and then goes and turns it back off because she has a leak in her service line and she can't afford to fix it. That is Alice. She gets her kids where she needs to do, she gets them fed, but she cannot get her line fixed because she doesn't have that money. And that's why I gave this shout out about legislators, because we went to the legislature last session and tried to get permission. Can we go past the meter and work on that line past the meter? And they gave us a resounding no. So that's where we are. But that's a real life problem. So we're working on other ways to be able to work with them and providing assistance in different manners. So we'll continue to do that.
Darren, you mentioned you came into Southern already knowing about this issue and how the underbanked are live their lives and everything. So what have you been doing in terms of your leadership at Southern to address this?
Yeah, again, so it's not just my leadership. Southern has a history, and I want to give a shout out to Janie Janocchio, our policy director, who's in the back. I didn't realize Janie was here. But she leads our policy effort. Southern, of course, is a financial institution, but we also have a nonprofit CDFI loan fund that actually promotes public policy. Unlike most financial institutions, we're actually at the legislature, and that's actually where I met Southern. And we've worked on a number of things way back with the Asset Funded Network and others to stop abusive payday lending. For example, in Arkansas, we know many families who struggle to make ends meet often go to payday lenders. While Arkansas has removed storefront payday lenders, there are still a number of online and other predatory payday lenders. And because all the states that border Arkansas still have storefront payday lending, then they go there. For example, in the state of Mississippi, where we also work, there are more storefront payday lenders in Mississippi than there are McDonald's, Burger King, and Starbucks combined. And so my competitor often is not another bank. It's often a payday lender, which extracts exorbitant fees and interest from folks. And so we've worked on a number of things in addition to helping to curb payday lending. In the state of Arkansas, if you're on TANF assistance, Target Assistance for Needy Families, and it's often a single mom with children who needs help with groceries or with housing. In the state of Arkansas, if you have more than $2,250 in assets, then you're kicked off of TANF dollars. And so the Department of Human Services have people that they pay $40,000, $50,000 a year to check to see if you have $2,250 in your bank account. And so what it does, it discourages families from ever saving or ever having a bank account where it can be traced or tracked. And it actually disincentivizes you from actually trying to work your way out of poverty. We went to the legislature and have been for several times now, led by Janie, and she did a great job this year. And we got an interim study to not like 35 other states to remove or extend those limits. We're really just trying to get them to adjust to cost of living, because those limits, the 2250, hadn't been changed since the 70s. So if it gets kept up with inflation, it'd be somewhere around $7,000. And so our legislature, and I'm a former legislator, I can say this, in their wisdom, decided not to do that. But we're going to continue to fight and work. And this year we had a coalition. Typically it's the Asset Funded Network, and others who are leading this effort who work on social issues. But this year it included the Chamber, it included, I believe, Entergy, AT&T, a lot of corporations. And so that's what the legislature hears and needs. We need business community to go out there and say, this is important to your customers, because if they have just a little bit more money, then they're able to pay that utility bill. They're able to get that line fixed. And so that's just one of the many things that we worked on. We also pushed, we try to incentivize or remove barriers from savings. And so we pushed what we called Adeline. In the state of Arkansas, if you get your tax refund done, and often we know for low a little nest egg. And so to make it simple, we added a second line to the state tax reform, so you can now split your refund between maybe a transactional account and a savings account. Proud to say Arkansas, the second state to have only done that. The first state was California. That's because the divorce rates were so high. They wanted to make it easy for divorced families to split. We did it, of course, so you can actually be able to save, and proud that this coming year, folks will be able to take advantage of that way. And you have to make it easy. You have to remove barriers for folks from being able to save, and that's just one of the ways that you can do that now in the state of Arkansas.
I cover the legislature, so wisdom's not a word that I usually associate with. Every now and then, I do. Marcy, you guys have made a really big, bold move in recent weeks, recent months, to raise your starting salaries and your minimum wage over there, or your starting wage over there. Tell me a little bit about how that factors into Alice and what you have learned.
So if you don't know, the minimum starting salary at Arkansas Children's is $15 an hour, effective in October of this year. This is the third time we've raised that since I've been at the CEO. And full disclosure, I have two board members here, one right here, and another, Philip Jett, so they'll keep me honest on what we're really doing. But it is our goal to move to a true living wage, and I don't believe $15 is yet a living wage. But every time we've raised our minimum wage, we have not found any ill effects to the financial performance of Arkansas Children's. And so that's what I would also encourage business leaders to think about. One of the contradictory conversations out there is if you force a higher wage, then businesses will not be profitable. And Arkansas Children's hasn't experienced that. So our ultimate goal will be that our minimum wage will be a living wage. But I'll land on a couple other points. So that I think it's important to know not everyone who walks the halls of Arkansas Children's is actually employed by us. We have some contracted services for some of our support services. So our contracts with those vendors require them to meet the same minimum wage that we do. And that is not always seen in healthcare. Sometimes the healthcare company will say our minimum wage is 15, but they contract for environmental services and that company can do what they wish. Our contracts require the same minimum wage to be applied. And there's a couple other things we're doing also to promote savings and to promote financial understanding and financial literacy. So our board also supports, beyond a 403B, kind of personal retirement savings plan. We have a defined contribution plan still at Arkansas Children's. And so the board sets that rate every year. I'm pleased to say that this year it was 3% of everyone's salary was put into their defined contribution retirement account. That's regardless of whether the employee participates in our 403 or 401k plan. We have both of those depending on the corporation. And so the board is very intent on that. It's a minimum of 2%, and if we've done well, they will go up to 3%. And I think for several years in a row, we've been at 3%. And then we have a host of other just kind of ancillary or wraparound type programs through our Human Resources Division to teach health literacy. So we have done lots of lunch and learns and Zoom meetings to teach about savings, to teach about how to split your paycheck on any given pay period, to help make sure folks can save for that, to explain the importance of retirement savings, that you want to be able to retire someday. You don't want to always work. And even if you are a lower wage earner, you can save for retirement and still make it work. So there are a lot of things we're doing for our employee base that is fully supported by the board to help elevate their economic stability in our community.
I want you to talk a little bit more about the stair-stepping up of the minimum wage. Did it reduce turnover? Did it improve loyalty? What did it do to employee morale? What did it do to recruiting candidates that I guess you saw something tangible from that?
So the first time when I got here, I think our minimum wage was around $8.50. We went to $11, then we went to $14 an hour, and that $14 an hour made a huge impact on retention and morale. The $15 an hour was well received, don't get me wrong, but we're now not the only one offering those kind of wages in Little Rock. And so we're competing with some retailers. Costco, for example, opened up, big corporations like Amazon. And that's why we are quick to also talk about all the other things we do, so that an employee in the moment doesn't just say, oh, I can work for you for 15, but I could jump to Costco for 16. I think the benefits we offer our employees, both paid time off, leave kind of programs, our retirement benefits, our medical and dental and vision benefits, we try to ensure that our employees understand what we call total rewards, so what their entire compensation package really looks like, on-site daycare, those kinds of things. It continues, though, to be a point of pride among our team members that our organization has done this. So though oftentimes maybe in the first communication I get the kudos, the team actually believes in this and are very excited to tell each other that this is a company that cares for you. I think the workforce challenges are really, seemingly insurmountable at times right now. The labor workforce is, we're short in every kind of skilled and unskilled position, it seems, but I believe these policies will hold us through these challenging times with the labor market and then just allow us to accelerate even faster when we're through it.
Darren, we were talking when we kind of came in the room, you like to look at statistics and number crunch, which is one of my favorite things about you. So you've seen the numbers improving in terms of we're making some progress on this front, but I mean, obviously far from it. What are you seeing when you look at some of the numbers?
Yeah, so we have made some improvements in unbanked and underbanked. Nationally, unbanked rates are 6.5, so we're at 7.5. So that we made some progress. I think 2 years ago when we did that last, we were at like 8%. So we've seen some improvement, but there's still a long way to go. Having a safe, basic bank account is really the foundation of beginning to build wealth. What Pew says is that 7% of the people born into poverty never make it out. It becomes multi-generational. So if your grandmother's poor, your mom's poor, you're likely to be poor. They studied the 30% who actually made it out. The 30% that made it out, they had some form of net worth. Maybe that was ownership at home or start a small business, but something that provided some net worth. And often family will take the equity out of the home to send a kid to college or start a business, and that breaks that cycle of poverty for many families. And so our work focuses on those wealth building opportunities. So in addition to saving, supporting entrepreneurs, particularly entrepreneurs of color, and empowering people to actually have a home, because your home is your largest asset. Home ownership rates in Arkansas are not necessarily improving, and then particularly for the racial wealth gap for people of color, there's about a 30% gap in home ownership rates between black and brown families and white families. And of course, median income, any gap you look at, it disproportionately impacts people of color. And so while there have been some improvements, there's still a long way to go to really try to help improve Alice families. And it's really about building wealth. And when I mean wealth, I don't mean millionaire status. I mean having the cushion so when a illness or car breakdown, small emergency doesn't set you back for life. 40% of Americans can't put their hands on $400 without borrowing it or selling something. And so I'm talking about a small amount of savings can go a long way. One transmission that's $650 sets some families back for years. And so just a little amount of savings can do that. And so for the corporations and business folks, let me piggyback on some of the things that Marcy said, encourage you. Some of the things you can do. What we've done at Southern, much like Children's, we've been on our journey to $15 as well. And so I hope that'll be implemented by our board this year. We've done some other things that have been really impactful, though. Oftentimes when a new employee comes into the company, you will wait 90 days or 120 days before they can participate in the 401k program. We actually stopped that, and we immediately enroll you in at the maximum. We match 6%. We immediately roll you in where you save 6% and we match 6%, and you get it at day one. Because if for folks to opt out is really challenging. And so everyone we've immediately enrolled, no one's opted out. And so they are now saving at 6%, and they're getting that match with 6%, and they're vested day one. And as a bank, because we believe in home ownership, we've also now implemented a 1% home loan for folks who work for Southern. retention tool, but also a way to build wealth. Now, we don't let you cash out when you refinance. And we reduce we don't go beyond 20 years. But that's the quickest way for most families to build wealth is in their home. And so there's a number of things we're doing. We also built an app because we know many of our families who work for us were, going to the payday loan stores, and so. Now, if you work for Southern and you have your account with us, which we hope you do, you have our mobile app. You can go on and immediately apply for what's called an employee opportunity loan. And this is when you're in line at Walmart checking out, you need another $100. You click a button, and $100 is automatically put in your account. But it's not a 2-week payback; it's a year. You get 12 months to pay that off with 17% interest rate. Which is the maximum allowed, but there's not much money off of that. But it's immediate, so it happens within 30 seconds, which many families are taking advantage of it. And depends on what your payroll is. You can get as much as $1,000. You only get one. We won't let you roll it over. But those things are important for families who struggle to provide just some basic help for them.
Todd, I'm going to give you a chance to piggyback on anything that Marcy and Darren said, but I'll throw the next question out too, just so you can go either direction with the fork in the road. The legislature is considering a host of tax reform changes here at the state level, so I do want to get everybody's perspective on how you think some of that may help, particularly some of the stuff that's geared towards low-income Arkansans. But I don't want to take you away from talking about what they said too.
Our wages are where they need to be, and our starting wages are above $15 an hour. But we have some challenges that when you look at, because we've stressed on this savings part, every employee, 5% of your pay goes to your retirement benefit. I mean, it's automatic. It comes out of the employee's pay. We're part of APERS, being a governmental entity, so as an employer, we put in almost 16% into a defined benefit plan. So the employees put in 5% of their pay, we're putting in 16% of their pay. And we try on the employee benefits side and the hourly wage side, we want our families and our employees to be able to take care of their families, and so that's very important. That, of course, all that flips around and figures into an affordability on the ratepayer side, and so we have to be very careful of that. You threw me up a softball on the legislature, and anybody that works around me is going to be shaking their head when they see this, but we tax water, folks. We tax water in this state, and if you want to give every family a tax break right off the bat, don't tax water.
It's good. All right. Darren?
Yeah, so the state of Arkansas for some time now have been trying to pass, or many of the folks in the room have been trying to pass a state earned income tax credit. The federal earned income tax credit has been credited being one of the most the best anti-poverty programs, lifted more families, more children out of poverty. The state of Arkansas could easily pass a state income tax credit for working families. It's probably not likely that's going to happen this session, what I'm hearing, but there may be some relief in the tax rates that might impact low-wealth families. But clearly, I think if there's something we could do immediately to provide assistance would be to provide a state income tax credit.
Marcy?
So I'll bring it back to children's health care and try to stay a bit out of politics. But 65% of the kids who arrive for services at any of the Arkansas children's facilities, a minimum of 65%, rely on Medicaid or CHIP for their health insurance. If the slides we saw earlier are true, if you can elevate families out of ALICE, it has a trickle-down effect that fewer families are needing access to Medicaid services. So should the taxation policies of Arkansas promote that, that could be a good thing. But our challenge is there are 700,000 children in the state, and more than half of them need governmental support for insurance. And so it can't be just eliminate a tax base and then eliminate services in the gap time it will take for a family to elevate their income level and their wealth, so to speak. So it's a challenging position if changes are made to the tax program at the same time they are made to eliminate the programs that support those people, because it will not happen overnight. And I think that has to be taken into consideration.
Marcy, Darren, then Tad, and this will be our last question because I'm going to get us on time, on schedule, so that I don't get in bad trouble here. You got a room full of company leaders, company executives, influential folks, and you got a big audience watching. Give me your last pitch for why they need to get more involved in this focus on Alice.
Well, I think Heather said it very well when she kicked off the luncheon today. Folks who get categorized as Alice are everywhere. They're in this room at this very moment. They're in your family. They're in your workplace. So if you own a business or run a business, I encourage you to look at the policies that will protect folks at the low end of your income and help elevate them. If you are in the business of public policy, have that frame of reference that every policy you promote has a lens of Alice through it before you actually pass a bill or pass a rule or a regulation.
Yeah, Marcy said it well. I mean, I think that, Alice's future is Arkansas's future, and so if we really want the Arkansas we want to have, we've got to really focus on this. And we who are in positions of influence and power can make a difference. And so I just encourage you to be engaged, be active, and look for ways to help. A couple of things you could do is look at Bank On. I haven't talked about Bank On. It's a program where not just for banks, but for corporations who also can get involved to help folks get access to a safe, decent bank account. Shout out to, I think I saw Arvest and to Encore Bank and others who are actively engaged as well. But also this issue of really removing the income limits for folks who are dependent on TANF benefits. That's an issue we're going to bring back up. We need corporate America, we need Arkansas's corporations to step up and assist us and remove it. It makes no sense that 35 states can remove these limits or extend those limits, and we can't change them since the 1970s. So we need you guys to lift your voice and help us do that for those families.
I certainly agree with everything that's been said by Marcy and Darren. I think one of the critical aspects that everybody in the room and all the businesses leaders need to remember is this is circular. I mean, every banking problem that Darren talked about becomes a problem for CAW or for your local business. Car insurance. People on the families in Alice, they're driving, but they may not necessarily have car insurance. So, that bad accident happens. It's just it is circular. It involves everybody in our community and in our state. So finding some answers to this and finding ways to help people generate savings so they can survive that crash, so they can survive that unexpected expense is critical to the economy. And you saw the numbers. I mean, we fix those problems. We help families get out of this income constrained area, and it benefits everybody in the long run.
All right, Marcy, Darren, Tad, thank you all very much for your insight and your thoughts, your thought leaders. I hope that you guys made some difference in changing some people's attitudes and opinions today. Thank you. Let's give them a round of applause. I'll hand the program back over. And I'm 3 minutes early. 3 minutes. I even had a timer set it was going to go off in the middle of someone's comments if we'd gone over. So.
Good afternoon. So anyone who knows me knows that I'm going to give the most serious plug ever, and that is that Central Arkansas Water has the best tasting water this side of glory. So as long as you know me, you will know that. But seriously, thank you, Roby, Darren, Tad, and Marcy for sharing your perspectives as well as your solutions in supporting Alice. So as you have heard throughout today's presentations, Alice households are experiencing challenges. In 2022, we will release Alice COVID-19 Impact Study, which features results from a survey conducted earlier this year with Arkansas residents on what life has been like since the start of the pandemic. This research was led by the Arkansas Asset Funder Network members at the Winthrop Rockefeller Foundation, and we have the president and CEO of WRF here, Dr. Sharice West Scantleberry, the Arkansas Community Foundation in partnership with United for Alice and co-funded by the Delta Dental of Arkansas Foundation. We thank them for their support. We can give a round of applause for that. As the pandemic continues, many of us are realizing that there is it is unlikely that we will return to normal, meaning the Alice households that you've heard about will likely continue to face uncertainty in being able to cover their basic needs. You were asked to join us today because the Arkansas Asset Funders Network recognizes you as an influential leader in the business community. As such, we are hoping that you would be willing to join us and use your powerful voices to help us drive solutions for Alice families. Today, I am here to ask you to join us in becoming an Alice champion. I'm asking you to join us in becoming an Alice champion. On your table, look down on your table. Don't look at me now, look down on your table. There is a placard that asks you to sign up to become a champion for Alice. Additionally, there are Arkansas AFN members, one who is at your table or near your table, and that person can answer any questions that you may have in joining our campaign. Our goal is not to prescribe how to act for Alice. Rather, we want to give you the tools and resources to better understand Alice and select an option that works best for you. If you are joining us via Arcan, please visit an updated website at alicenar.org or click the link that was provided in your email to sign up to become an Alice champion online. Signing up means that throughout 2022, ARFN will connect with you to help identify ways you and your organization can act for Alice. If you'll look on the screen, we've highlighted a few ideas for you to consider as an Alice champion. With that, we want to play videos from 2 of our early Alice champions, and afterwards, we will give you some time to ask questions and discuss potential roles with your counterparts at your table. Thank you.
So I'm a champion for Alice because of my personal experience. I can remember when I was a student in middle school and my dad got a salary job in the cotton mill. It absolutely changed my life. We celebrated in the driveway, my mom, dad, and I hugging, knowing that our life would be a little bit better because resources would come that much easier. Here in Arkansas and in Hope, we have kids who are experiencing that same challenge, that same reality, except the promotion isn't coming. The parents aren't getting those jobs, and I want to do something about that. In any given year here in Hempstead County, we have about 30% of our families who would qualify as an Alice family. My hope for the future is that we as Arkansans decide that Alice families matter, that we can do something together, collectively, with political willpower, with the ballot, also with legislation to change the outcomes for all Arkansans, because remember, we are all better together. It is time to focus on Alice. Arkansas needs Alice, and Alice needs Arkansas. I'm Jonathan Crossley, Superintendent of Hope Public Schools. Now is the time. You can go to alicenar.org for more information and be a champion with me. Let's do it together.
Hello, my name is James Reddish, and I'm Executive Vice President at the Little Rock Regional Chamber of Commerce. I've been in economic development for over a decade. Alice workers are a critical part of our economy here in Arkansas. They educate and take care of our children, they serve many essential needs in the healthcare industry, and they help keep our hospitality industry running in restaurants and hotels all across our state. Alice is critical to the future growth of Arkansas. Here at the Little Rock Regional Chamber, we've been focused for over 4 years now on public education in Central Arkansas. We know this is critical to the future growth of our community and, importantly, to impacting the Alice members here in Arkansas. Education can be the silver bullet for our employees and for our students. As they gain skills and they gain ability to get higher paying jobs and produce more value for companies, we can help reduce the number of Alice households here in Arkansas. I'm an Alice champion because as an economic developer, I know that our region will only grow as far as we can take everybody with us. It's important to focus on Alice because those are the families that have been left behind and that are not participating in the economic growth that we see here. Alice is important for all of us if we want to keep growing our state and our region. It's time to focus on Alice. Arkansas needs Alice, and Alice needs all of us. I'm James Reddish, and I'm a champion for Alice. To learn more, please visit aliceinar.org.
All right, very good. I would challenge anyone here to ask themselves that you learned something new, didn't you? I think we can leave here feeling like we know a lot more about our neighbors and our friends in this state. One clarification, the card, the champion card that you might be looking for is in your wonderful swag bag. If you'll open up that beautiful gift bag, and you've got a portfolio in it, and inside are some cards that you can share on Alice, and your Alice Champion commitment card. So dig around. What we're going to do here is wrap up. I'm going to say a few closing remarks, and then we invite you to stay, sit at the table, talk with each other about Alice, about some of the things that you see in your shops and in your community, and feel free to mingle and ask each other questions. So anyway, as we close, I want to thank Arkansas Asset Funders Network and the steering committee in particular, and I'm going to invite the steering committee to stand, or someone from each of these organizations to stand, because they are why we are here today. Entergy Charitable Foundation, Walton Family Foundation, the Federal Reserve Bank of St. Louis, Bancorp South Community Partners, Hope Enterprise Corporation. Somebody stand. Stand up. We want to see you. The Women's Foundation of Arkansas, the Winthrop Rockefeller Foundation, Arkansas Community Foundation, Baptist Health Foundation, Heart of Arkansas United Way, Accelerate Foundation, Arvest Bank, Communities Unlimited, and the Arkansas State Treasurer's Office. So thank you all so much. A special thank you to our esteemed moderator, Roby Brock. He's just got promoted. We always appreciate you, Roby, and you do such a good job. Thank you to Arkansas PBS again for being our partner and putting us out there live. And finally, thank you to you who showed up out of a busy schedule today to learn more about Alice and to help us speak up and hear from Alice. Thank you very much, and please stay and visit.